All right, welcome back to another week of totally dissing on Kramer. Just kidding. Actually, I gotta give the guy a couple pats on the back this week. He did pretty good. Um, I've gotten into the one from 3 days ago, run through the lightning round, and I just got the posting for the one he did recently, so we'll work through that as well. First off, I wanted to point out I did have a nice little cup and handle working here on cue. Pretty methodical, if I do say so myself. We've rejected at that pivot we expected it to be, and we're coming down in between consolidations, kind of working out so far. We may get some accumulation here and continue, or we may just play the range for the rest of the day. Hard to say. The one for SPY hasn't altogether failed, but it's kind of looking that way. I was predicting maybe we'd have a rimline attack here and then pull back and consolidate and run higher. So far, that plan is basically canceled, so I'm going to delete that. Let's go and look at a couple of other things we're seeing with SPY real quick, and then we'll get into the mix of things. I am doing this live today, so if you are joining us on YouTube, shoot me a comment, say hi, throw a ticker at me if you want. I don't care. I love doing this stuff, so we'll see what we can do for you. Okay, moving with SPY here, we've got a couple liquidity zones to kind of look through. Running my 2-hour chart, I've got kind of where all of the major liquidity zones can be found, but we're in a bit of a nice parabolic trend. We've gotten to that all-time high liquidity zone, we breached it, and then we immediately pulled back. So let's see if we can spot what's next on the 30-minute chart. We're looking for possibly rejecting this zone, accumulating in here, and maybe getting some follow through to go higher, but we may even give half back and come back to yesterday's high for a test one more time. So be a little bit nimble today with any moves you expect, because you may get blasted out on one side or the other. So just be cautious today with SPY. All right, let me get the big grid going here and start focusing on a couple of swing trade setups that we're looking at. Pardon my sniffles here. Still dealing with a little bit of a head cold. So this week, Kramer's talked about a few buys, a few sells, and a couple of stayaways, as well as a hold. Let's go into the mix here. Let's see here. The first thing he mentioned was Generac. And he's a bit on the buy side of this thing, and I got to hand it to him. He's in the right spot. We could reverse here and give half this trend back, maybe even get into a little bit of follow through, but let's look further left on this and take the tail of caution. Market structure has done its thing. We've accumulated, and we've seen things happen before where we take into account range bars from a monthly chart do matter. We haven't hit the all-time lows yet. We haven't hit the IPO lows yet, obviously, but we're in a range bar area where we can break this support area and start to retrace this guy one more time, even though we've already hit it once. It looks a little bit like it could be a bear flag for an extension lower, but not always. Sometimes you'll get back in the range, and sometimes you'll go for a monthly bar back to the upside. Sometimes you'll even get a mean reversion of that whole trend. So I marked that out as such. We could see it become bullish here, but just be cautious of this zone here. This is the half back of the current trend on the weekly, and we've touched it a couple times and bounced, but we may lose momentum and start to go and head south and recover this bar here. So always be a little cautious with this type of thing. It looks a little like the inverse head and shoulders, but this is after consolidation. There's not really a trend here to reverse yet. This, we got the reversal, the double bottom, it did its thing, went to target, rejected, came back down. Can we stay long on this after a call out by Kramer? I'm not going to go for that just yet. I'm going to wait and see what we get for consolidation here and see if we can get a swing trade out of it back to that high, or maybe even a bearish swing trade. And look, that daily chart looks pretty gappy below that zone. So if it goes through this zone and it takes a dive, it will be quick. So just be a little cautious going along on this one. Nice call out on the short term. No, it did give us some bearish retracement or bullish retracement, but it's not a reversal yet. Kind of wait and see where we go with this zone. We may visit it one more time, and if we breach it, good news bears. I'll short it. All right, looking forward. Next thing he was talking about was BlackRock, saying it's kind of a buy. Let's see. I haven't mapped this one yet, but I'm looking at maybe we get a nice weekly measured move out of it. We certainly have the mean reversion underway above that pivot. So, yeah, we could definitely see this thing go higher. And this is already cup and handle looking thing. Look at that. Perfect round, pullback handle, and breach. Measured move has been met outside the rim. I always like to mark these out. Sorry if I'm clearing my throat a lot. I'm still dealing with some congestion here. So we take the primary move, which is usually about base of cup to rim of cup, set it up on top, almost met that target. If we do start to pull back, usually it'll split that, go for a move down to about half of that expected move. And if it consolidates and continues higher, sure, we can go higher. We can see this entire primary become a secondary, and we could get a really lofty bull target for this thing, up into the 980 range. So certainly take that in mind when you see this pattern. I expect consolidation here. We may finish half or whole of this move, maybe 880 to 980. That's a big range, guys. So can I say it's a buy right now? It's a yes. Investors will be buying it right now, but for traders, we're going to take advantage of the price action in between. Thank you, and we're going to maximize our efficiency. So pay attention to this zone. If we hold here and we start to consolidate and maybe make a bull move, sure, swing traders can take a later exit at 880 or 990 or 980. Just be, a little bit efficient with your trading on this particular one, and always look at the monthly chart. Yes, it's done things like this before. It does make sense to go higher, but also pay attention to one simple fact. That previous high almost splits our zone. So medium-term target for investors looking at about 880, 885. Long-term breakout could see us hit, 980 or so. And then think of this. This is just one big cup and handle on a monthly chart. Same setup. If it goes above this rim line, this rim line in one shot and gives us a breakout trade, cool. But the likely scenario is it'll hit that and pull back and consolidate for a while, make the handle of the cup, and then give us continuation later. We're talking years later. So, sure, good investing stock. BlackRock's been around a long time. I'm sure there's some controversy in it. We can see that in the chart. We can see that in the chart over and over again. All right. But overall, they're doing a pretty damn good job making money. I'm with it. Take your efficiency for day trading and swing trading, and definitely take advantage of knowing your efficiency range and figure out if you want to invest in this thing long term or not. But for me, I'll almost give Jimbo a pat on the back for this one and say, yeah, okay, it can definitely go higher. Next, he talked about this guy here, Powell Industries. As a buy, no, it's been top ticked, sir. Looking for a retracement on this thing, let's say probably around the 142, 143 range. Mark your liquidity zones. Just grab a wick and drag a box around it. Gives you a pretty damn good idea where to expect any buyers in this mess. I always paint them orange so I know about them. Weekly chart, sure, it's just a mean reversion. Day chart gives us the bag. We got a bear target here for sure of at least 148.50-ish or so. We're at 156.80 now, so we got some time in this trend to return to a low to grab it. Certainly, if you're going to invest in this thing, take some caution. That's pretty damn parabolic. Can it give a half back and continue? Well, yeah, it's done that before. Easy peasy. But this is pretty damn vertical. It's a very too far, too fast kind of setup for you. So definitely take a little caution, watch for consolidation. Maybe it'll give us a signal to go long. For now, it's a short. Being in the trend here, it ain't over, guys. Wait till it finds this support down here. As for day traders, they're pretty much done with it after breaching this low from the other day. But you know, momentum could certainly take it a little lower, and it's trending anyway. So let it finish its move, and we'll come back to this later for a bull. But definitely slapping Jim's hand on this one. Like, no, we top ticked a little bit, buddy. Maybe long term it can be investors' stock, sure. For now, it's a short. Moving on. Didn't really have any sells, but he did have a hold or three, and one of them he kind of hinted at being a sell. Maybe regional financial or regions financial here. Let me go to the weekly chart first. Yes, we see potential. I marked this in gold. If we break that zone, sure, we could go higher. Absolutely. Mean reversion, it's above. It's definitely in the range of printing a huge measured move out of this trend. Absolutely. He kind of said hold this one with a stake of, you know, don't necessarily buy it here, but I'm thinking, yeah, you might be right. We might get a handle here. We do have a cup set up, sure. But if we start to trend higher than this previous wick on the daily chart, we could easily eat this zone and start running for you know, a massive bullish breakout. The measured move has it pretty plain. You got your primary here. Run it to the mean of consolidation. Stack that. Oops, dragging my chart the wrong way. On top, yeah, we have an outside bull target compared to the weekly high. Yes, we can definitely go back to previous highs for sure. In the meantime, short term, day traders and swing traders alike are looking for a pullback here. We've hit kind of that liquidity zone. We found some sellers. Be aware that we're likely to pull back a little bit more and give us more of the handle part of the cup before getting long on this thing. So yeah, I mean, if you want to hold and sit through some drawdown, cool. You can maybe sell some covered calls and hedge yourself a little bit. Possibly even sell some like 1850 strike puts to be standing by, waiting to get paid to go long on this thing. Or you just wait till it hits that bottom, then sell those puts, whatever you want to do. Options traders are going to be all over this, I'm sure. And in the meantime, the setup looks like it's very likely to pull back first. So not necessarily a slap on the hand, because when he called this out, it was in this region. It was still climbing. But for now, it's let's wait and see what happens with the outcome of this cup and handle. We want to make sure it confirms. Let's see here. Got into another one on the hold list was DigitalOcean. I'm kind of skeptical on this one. I've marked out some definite gap zone here. Let's look a little further left, guys. Market structure's done its thing. It's consolidated. It's got this nice little consolidation pattern here on a weekly. We can see the follow through is trying, but we're struggling to get really far enough away from that previous pivot to really start closing this gap. But this is where liquidity loves to be handled, and if institutions are going to start getting into this thing, that's where they're looking for it. So maybe they'll give it a buy and start closing this gap, but be careful, because if we breach this too far, we can go and take a pullback and give half of this trend back. And it's attempted before, didn't make it. We still have a possibility of hitting 30 bucks on this thing if things are going to consolidate. So yeah, maybe wait on this one a little longer. And this was one that was mentioned the week before. The other one he mentioned this week was this guy here, CABA. And I kind of have a couple of mixed emotions about this one, as far as that chart's not the most appealing chart for me to trade typically. I don't like a lot of that choppiness. Back in the day, we did set up some nice trades in this thing. It was very easy. Now we're looking for consolidation, and you know, we've got pretty much half back at this range here, and then we tapped the full back of this range here. a little bit of a stretch below, came back through a now demand zone. Yeah, we could consolidate and run up to our liquidity zone again, but kind of put a pivot right in the middle of that. So short-term target about 23.30, not much above where it's at now. And maybe we get a swing above that to go to the next liquidity zone where we'll find some sellers, I'm sure. Swing traders all over this thing. Would I hold it in my portfolio for long term? I'd rather wait and see where the traders are going to take it first. I'm a trader. I like to be efficient, and it gives me my opportunity to get the most efficiency out of my investments. And here, I'm not too interested in it just yet for an investment, but I am looking to maybe swing it a little bit. Let's see here. Had a few on the stay away list. One he mentioned was VICI to stay away from. And I'm not so sure about that. I think we've done the halfback thing. We found some buyers in here. We could see this reverse here, so definitely watch this zone. If we breach it, sure, we can head for a bear target, but maybe we hold in here and give us a nice little bounce and give half this trend back, maybe say a 30.80 target or so. Doesn't move a lot. It's at 29.06 now. That's not a huge move. It's not the most interesting day or swing trade, but it certainly has a pretty decent setup for possibly bouncing up here and giving half that trend back. Okay, give it a buck or so. In the short term, it looks like it's been shorted just a little bit, and it played right into our liquidity zone, so we could see a measured move down below this particular liquidity zone, but so far the buyers are trying to find it here, and we may see it breach this and give that target to that revert back to 31, but not the most interesting thing for me to trade. And yeah, I certainly could say if you're an investor, stay away might be a good idea. So kudos to Jim on that one. Maybe take some advice on that one. PTLO here. This one he's also saying stay away. And this one gives us market structure at its finest. And this is what I was worried about with that other one, where you consolidate and then you revisit that low. And then once it breaches, look at this. Pretty easy pivot there, guys. You don't need to be a brain surgeon to spot that one. Wicked right to it recently on the weekly, and that daily shows us exactly what we love seeing. Primary, secondary, we hit the support and bounce. Watch for consolidation here. Maybe we get a chance of going back through that 1650, and a nice mean reversion play above that would be an outside target to about 1875, about half this trend here. Maybe. Investors certainly gonna probably stay away from this, so good advice on Jim's part there. But for traders, this might get interesting pretty soon and give us a nice couple scalps. So I'm gonna watch this one for a longer term swing trade right around this area. Maybe see us with a couple of signals going into next week, possibly. Another one he said to stay away from, MARA. This thing has been kind of a widowmaker lately, and crypto's been flying all over the place. His advice was, yeah, just go trade Bitcoin. Sure, if you got that kind of capital, go for it. But if you don't, you scalp the pennies, and this thing's trading at 22. It's not exactly a penny, but, it had been before. Look left, guys. $3.11 on the weekly. Monthly chart, market structure. Again, consolidated. This one blasted out, gave a nice reversion, done its thing, second consolidation. Can we see this thing start to trend up? We certainly could, but let's put a couple of marks on the chart to kind of be aware of. I've already done that here. You can see that a primary move has been had here. We've consolidated. We hit the secondary target. That's old news. Now we're looking for a possibility of giving this bar back. I made this pivot red because if it breaks this, it will suddenly eat this bar. So we have a bearish trade set up, and we are consolidated. We've got the bear flag pretty much finished. we may give that full move down to $16.50, $17 being a bear target. It's looking good so far. If it breaches back out of the top of this, we might get fooled and get a mean reversion. So certainly be nimble on this if you're going to scalp it or day trade it or even swing trade it. But so far it's looking a little more bearish than bullish. Keep it on your radar. Certainly, yeah, good advice for investors to stay away from something like this. I can definitely give Jim some more kudos on that one. But traders will definitely take advantage of this thing. I kind of like trading Mara. It's been a fun one. Let's see, any other mentions this week? I think that's about it for him. I had a couple of things that I've been trading and doing very well with. Let's get into a couple of those. I've been bullish on Lyft. I'm running some debit spreads out of the money, looking for a return, and lo and behold, we have a solid move. It gave half back. This is now the old cup and handle, and if you throw it on a 4-hour chart, it's a little more evident. There's your rounding bottom. Rim lines on a cup, you get 2. You get half the full range bar here, which we just breached here. Gave us the top of this bar. And secondary target can be up here around 1920. I look at the consolidation just before the previous high as a point of interest, so I'm going to mark that there. If we continue on this trend, that's where I'm expecting to see the pullback for a handle and maybe give us, a little bit of this motion here. And if we consolidate, we usually can take the mean of the base of the cup and build ourselves a target out of a measured move of that previous trend. And whether it hits this rim line or that rim line, you can pretty easily take the breakout trade of the handle after it gives half a bar back typically. You can stack that and it gives you a bull target. My first target is up here at 2050, reason being I'm looking left and looking at this previous support area. But if this thing gets really crazy, and we've seen that sometimes these stocks can, a mean reversion's up here around 31 bucks. My debit spreads are all the way out to April 19th expiration. Got the 25-30 spread for cheap because I can make high percentage returns on it. It's certainly in profit now. Yesterday it hit 100% return. I sold half that position so that my profit on that locks in zero risk because my return has covered the risk on the remaining half of my position. I'm looking to ride momentum on this thing, and if it continues to run higher, my spreads will certainly do well. Will I expect them to ever be in the money? No, do not FOMO that. I go outside the money because I know where that weekly and monthly bar is. But if I'm looking for a trade to those, very unlikely to hit. But if it gets above $20, I get exponential returns on the really low risk debit spreads I made. And you start to go beyond 100% with those things. Sometimes you get momentum to take you even higher. And when things get really consolidated here, they tend to break out with a bigger move. And that's why I'm looking for hanging on to the rest of that position. Breach my angular here and start to accumulate to that cup handle, approach $19. Those things will probably be so profitable, I'm just going to take the profit and walk away. Maybe I'll convert the other half of that position into a few butterflies where I sell a credit spread above those strikes. But in this case, probably not. In this case, I'm going to look to just profit the dang things as soon as possible. Looking for a 1920 first target. Maybe a little bit higher in there. But I'm not going to expect too much of that. I'm not going to FOMO that. Another trade, kind of sympathetically, look at Uber. These are both the same kind of companies. Geez, I can't type. Uber, kind of the same setup, only this one has gone beyond market structure, guys. It didn't consolidate for long before it just bull lasted. It's a parabolic. This is a buy high, sell higher setup. and 2-for-1 measured move would certainly see us up here in the $100 range. Still consolidating, still deciding whether it's going to run higher or not. Those first two moves were pretty primary, pretty easy to spot. All I had to do is take a swing entry on a, I got the April 19th, 100 and 105 strikes, way out the money, way cheap. And if this consolidation breaks bullish, cool. But I'm so low risk on those things. I'm so low delta in those spreads. I'll either break even or take a small loss if it fails. Very low risk trade for me. So if we get a nice 2-for-1 out of that thing, yeah, golden targets. And it kind of moves symbiotically currently with lift. They're both kind of the same thing. So watch this consolidation. It is so far looking like a bull flag. You never really want to go and just attack a bull flag expecting to break out after it breaks out, because sometimes liquidity will get grabbed and they'll get shorted probably half a step above the previous high. But in this case, we're consolidated. I bought the bottom of the range, and I'm going to wait for a break, and I'm comfortable. If it doesn't break, I can take a little profit, break even, small loss maybe. Doesn't matter. It's a low risk trade. But if things get good and it starts to break out, I like the long term on this one. Definitely a good swing setup for me. Let me see. I am live in the stream here on Bullish Bear, so if anybody's with me, if you got anything you want me to look at, feel free. And same with you guys on YouTube. Shoot me a comment in the chat, and if you want me to look at a ticker, I'll happily take a look.
For Uber, how far out is your expiration date?
On April 19th, essentially I run, when I'm swing trading debit spreads, I'll tend to run 30 days plus DTE. Mainly because in something like this, I want to have plenty of time on my side to let that thing work its magic. In some cases, I will run weeklies if it's something very volatile and very quick, or day trade setups. I'll run, maybe a week or two to expiration just for a quick scalp. But this one, I'm planning on holding a few more days to see if it's going to break this range and give us a good breakout. That's typically why I'll run, 30 plus DT on that type of setup. I'll need to be a little more forthcoming with my entries on those. I sometimes forget to call them out in the chat and say, hey man, I'm taking a long here. I don't necessarily want to consider myself to be any kind of financial advisor. I don't want to go and lead people into a trade. It's just really a trade idea. Don't just do what I do. Take your own analysis to it, make your own decisions on that stuff, certainly. But I'm happy to help out with my technical analysis and see opportunities where a trade would be appropriate. Wheel trading something like this, I don't necessarily like the return per dollar invested. So like when I'm looking for a wheel trade, I want to see that I like to make 20% a month on a wheel trade if a minimum for something volatile. Something non-volatile, I'm happy with like 6 or 7%. This does not hit that 6 or 7% criteria for me as far as wheel trading goes, so I won't. But I might consider it with Lyft. Lyft has a little bit better return per dollar risk. So I'm thinking maybe I'll take a swing at wheeling Lyft, but for now it's a swing trade because of the setup. It's a cup and handle. It's not necessarily going to break out. It can actually trend down that whole length. Let me pull it up here. It can go back down to this low. So I don't want to take a long equity position and try to beat a possible reversal at this key pivot area. So I don't necessarily want to wheel trade this yet until it breaks out of this range and starts eating this weekly bar. On consolidation, it would have been smart to get into a wheel trade earlier, but I just wasn't paying attention to this when it was consolidating after market structure did its thing. So I missed my opportunity to wheel trade this down here where I would normally love to do it. Here I'm a little skeptical. I'm going to wait for something to tell me that's going to trend. Ideally, when you're wheel trading, you want something that's in a generally slightly bullish trend. This is opportune. this would have been great. You probably would have got called away in this move here or this move here, but it gave you a chance to get back in again later. I missed that too. So I'm going to wait for my next opportunity. I'm going to be very patient with my wheel trading strategy in this particular equity. There are a few others that I do. And as far as bang for the buck, even though the liquidity is not quite great, my wheel trading on OPEN has been awesome. In spite of that pullback, we got exactly what we want. We got market structure doing its thing. It was capitalized all the way down to a low. It's consolidated. It's in a range. It can go and head for that low end about $2, but you can get enough return wheel trading this, even though it's slightly bearish, to beat that low pretty quickly. So you're looking at probably almost 10% on biweekly options in this particular equity, which spells out 20% or better on the monthlies. That's my style. I love to be able to do that per dollar. So my percentage returns on wheel trading, even in a slightly bearish trend, can beat the low and beat the trend and stay ahead of it. And last year when I was trading this thing on this mess here, it was pretty easy to stay ahead of this, and by about the 6th week in this thing, I had a zero cost, and everything beyond there was negative cost because of the premium I earned in this whole consolidation period. Easy trades. I ended up getting called away at one point when it broke above 5, but for now, I was waiting for this to finish. I missed my opportunity to get with it here, but I'm in it now. And it's consolidating kind of right in the middle of that range. If it breaks too far below 250, I might be a little cautious to say, okay, well, I can take the premium I've made, wait for a lower low, or maybe even sell $1, $2 or $1.50 strike puts on that later on, maybe. But for now, I'm okay consolidating because I'm still at a cost basis that is currently right around 652 or 252, 652, 252, even though I've been in it for a short time. So I love this volatility, and that's what brings that options premium to me, is that volatility itself will push up the value of those things and make it exceedingly tasty for premium sales, even though it's a penny stock. You can beat the odds on stuff like this. It's pretty sweet to be able to do so. Another position I have on, even though I haven't been as actively wheel trading it, is AMD. I got into selling puts, got assigned, took a long, been sitting through this stuff. I did sell a covered call on this upper range here, and bought to close it. Didn't sell another one till later on. Sold one around here, and of course I didn't sell a second put on this thing to take a larger position down here because I was still holding assignment. It takes quite a bit of my capital to run something like AMD, and the percentage, it's right at the threshold of 7% monthly for me, but it's been a great assignment on that so far, and bought to close my covered call in here, and I have yet to sell another covered call, but I'm thinking about it today. So looking at the dope on this thing, I mean, you've got a pretty sweet little measured move set up here. It's already hit that high. It may pull back, it may not. I'm going to wait and see, probably to the end of the day, maybe sell some calls up around the 215 or 216 strike. Might even go so bold as to say a 217 strike. And wait for this to consolidate a few bars before I really get interested in selling any puts. However, I may consider, if I'm looking at the 4-hour chart, if it rejects and comes back into the zone, I may just sell in the money or at the money call and just take my exit here and wait for it to come back down. But I might end up losing out on a potential, 10 bagger, as we call it, or a runner. That's okay. I'm not going to FOMO that, but I think I might just sell probably at the money right here and just wait. Kind of indecisive on that one. It's one that I loosely wheel trade because, like I said, it takes a lot of my capital to run that thing. Anyway, moving into the close here, we're looking at SPY one more time. I love SPY. It does a lot of things for me. And right now on the 5-minute chart, we've pretty much finally finished our handle, but we're not anywhere near where I was expecting it to be. Go to the 1-minute chart. I was expecting it back here. It's over here, guys. There's your channel. If we break out of the rim line here, we could say close around 515, make an all-time high close. That'd be great. Tomorrow, I'd expect it to pull back from there if it doesn't do it already. So be cautious for trading SPY, but you could certainly go and scalp futures. Today's a great day for scalping futures. We had a few great trades in the morning, and now we're just waiting for this cup to finish out. Maybe we get an outside move towards the close and shoot that 515 target. If things get really nutty and we get a runaway, let's zoom out a little bit more. Look at this. Can we take that as a primary and secondary? Absolutely. I'm not going to run to the peak. I'm going to run to the mean and stack that on top of our handle here. That could be one hellacious outside move to, like, 516.50 if it runs away. I've got room all the way up there, but I don't think it's going to hit that today. Let's say we find a happy medium, maybe get a 515.50 play out of this thing, but watch for consolidation here and we see if we can continue higher. It's certainly got the cup and handle set up. We're just waiting to see if it follows through. Be nimble. Definitely don't forget to take profit, but 0 days might give us a good swing, probably coming up in about 10 minutes here. Comparatively, QQQ, we had exactly what we expected with the cup and handle. There's your cup. There's your consolidation. There's the breakout. Hit the target. Came back. Tested support. Hit resistance again. Tested support in an angular. And now we're above our midpoint. We're likely to hit our liquidity zone up here at about 446 pretty quick here. We may even see an afternoon push into the close to run higher, maybe 446.80, possibly even breach that and go into runaway mode and go to like 447.50, just an extension of this liquidity zone above. Let's kind of eyeball it. But man, we are bullish as hell. So trade bullish, trade with the trend. I'm going to let that be the end. I will see you guys tomorrow. Have a wonderful afternoon. Be very nimble and happy trading. We'll see you next time.
Thanks, Jeremy.
You're welcome.